All right, good. We are live.
All right.
Go ahead. All right, so I'm just going to give it about a minute or two to see if we get people rolling in.
Perfect.
So far, no one just yet. But yeah, we'll give it about another minute or so, and then we'll go ahead and get started.
Sounds perfect. Looking forward to it.
Great. All right, looks like we got some people logging in. So we'll give it about one more minute or so, and then we'll just go ahead and get started. Thank you guys for joining us. Awesome. All right. Awesome. So we're just going to go ahead and get started. Again, thank you everyone for joining us. My name is Yaritza. I am the digital marketing specialist here at Foothill Credit Union. So again, thank you for joining us for our second live event where we sit down with some of our subject experts and we get all of your common questions asked. And for today's event, we have our consumer lending supervisor, Michael Arispe, here to talk to you about GAP and MRC insurance. So Michael, do you want to go ahead and give a little intro about yourself?
Yes. Thank you so much. Again, thank you everybody for tuning in. My name is Michael Arispe. I am the consumer lending specialist. I've been in the financial industry for about 20 years, and the majority of that has been in finance and consumer lending. So I just like to give some of this knowledge out there that we're seeing, in today's markets right now with the auto industry and being all over the place with auto loans just costing more. We thought we had these two powerful products to talk about, GAP and MRC, that can help you navigate through this crazy market, right? You're keeping your cars longer because there's no inventory. So we believe both of these products will speak to that.
Great. Okay, so before we go ahead and jump into these questions, I just want to remind everybody that if you do have questions throughout the event today, please leave them in the comment section and Michael will go ahead and answer those throughout the event tonight. All right, so Michael, you ready?
Let's do this.
All right, let's just go ahead and jump right into the question. So, Michael, what is even GAP insurance and how does it work?
All right, so GAP insurance. I always like to say it's the one thing that exactly how the name sounds, it does, right? So what it does is it covers the gap in between. Let's say you're financing a vehicle and you owe $20,000 on it, right? Unfortunately, you get into an accident, and what does the insurance do? Is they total the vehicle out, right? So that's meaning that they're going to pay it out up to a certain point, and they're going to say, you go find another vehicle. What the insurance does is the first thing they do is they do an evaluation, right? They say, hey, what is this vehicle worth, right? So when they do that evaluation, you may find yourself where you owe more, right, than what the vehicle is worth. So the insurance isn't going to pay you because you maybe purchased it more, right? Bought it for more, negotiated, and you ended up buying it for more than it was worth. And like I say, in today's market with vehicles low inventory, they're charging more at the dealerships, right? So you get into this vehicle, you go ahead and, unfortunately, you have to use your insurance. It's totaled out. GAP, they step in and they cover that gap. So insurance company says vehicle's only worth 15, but you owe 20. So what's going to happen? GAP comes in and says, hey, here's that other 5. We cover it. You're good. You make your loan whole and go and buy your next vehicle. If you don't have that, what happens? They say, okay, we send $15,000 to your finance company, but you have to come up with the rest. So until it covers that gap in between that any negative asset inventory, if that was to happen.
Perfect explanation. So now that you talked about how it works and what it is, how much does it even cost?
Right. You think like, oh, well, they're going to come in and cover $5,000. How much is this going to cost me? Right. Hey, wait, $395 one-time fee through Foothill that is specific to our pricing. You don't pay it every month, $395. $395. Some people say that's every month. No, it's one time through the life of your loan. And what it does is it covers that loan no matter if you have a 3-year term or an 84-month term, it's going to cover that. So it's a one-time $395. So great deal.
And compared to dealerships, it's
Right.
much lower. Just like we just got a comment from Patrick saying, I'm sure, Patrick, you have probably done some financing with this, because he said the gap with Foothill is a lot less than the dealership.
Exactly. And that rolls us into GAP product has no cap of what the dealers can charge for it, right? We all buy it from potentially the same company, same insurance company, but what the dealers do is they make money off that. They say, we've seen members pay, like Patrick was speaking to, $1,000 for the same product. It's doing the same exact thing, and it's only going to cover, that same amount, but they want $1,000 for it. So what are they doing, entail? They're pocketing the rest of that money. We're looking out for the benefit of our member. When you do good, we do good. So we want to make sure you get the pricing, best pricing for it.
Absolutely. So do I need GAP on new and used autos is our next question.
Great question. I get this question a lot. Think about it. Anytime you finance a vehicle, whether it's new or used, you need GAP. Whether you finance a used vehicle or a used vehicle, potentially in new vehicles, you have a higher depreciation. As you hear, as soon as you drive it off the lot, they say almost within the first year, 20% decrease in value. But also with used vehicles, that can happen as well based on how much you drive, right? If you're putting a lot of miles on it, depending on wear and tear, how you keep it up, there could be a high depreciation. So yes, you want to guarantee that. We say that's your spare tire, keep it with you, and on new and used. Same price too, $395, whether it's new or used.
Awesome. So if someone has GAP, do they still have to pay their deductible?
Yes. We get this question a lot. So what happens is, let's say you have to pay your deductible of, let's say, $500. You are responsible for that deductible. GAP, again, will only step in if the car's totaled, but what they do is that deductible is always responsible up front. So I just want to put that out there, because sometimes we do hear at the dealers, they say, hey, don't worry about the deductible, and members think that you do have to pay that. That's an agreement that you have with your insurance company. But again, what we do offer on top of our GAP, it's called GAP Plus. We actually give you $1,000 towards your next purchase, as long as you finance with Foothill Credit Union. So if you think about it, if you use it, we give you $1,000. It already paid itself, over and over again, right? So we're giving you that $1,000 as a down payment towards your next finance vehicle. Great question.
Yeah, so that actually brings us to our next question. So is there any down payment assistance through GAP?
There we go. So that's that $1,000 that we speak to. I got a little excited. I think I jumped before that question, right? It's a great thing. It's rare to have, right? Because a lot of times the one you get from the dealers don't come with that $1,000. They charge you $1,000 for it, but they don't give you on the back end that $1,000 down payment assistance. But again, I want to put it out there. You do have to finance another vehicle with Foothill, and that's an agreement we have, but first $1,000 on us, right? So that just makes that process a lot smoother.
Awesome. So that kind of covers the first half on GAP insurance. So we're going to go ahead. So far, no questions about GAP, but Patrick, seems like you're a member. We absolutely love your awesome comments, because he said Mike is always great to me. He always helps me, and that he's been with Foothill over 15 years. So awesome. Awesome.
I know, Patrick. Hey, Patrick, thanks for tuning in. We appreciate you.
So let's go ahead and jump into MRC. So Michael, tell us, what is MRC and how does it work?
There we go. Another great product, mechanical repair coverage, right? In the industry, we just say MRC, but like you said, how does it work? MRC was created due to the fact that vehicles are expensive to repair, right? I mean, you have that warm, fuzzy feeling that when you get your vehicle and you have that dealership coverage or that manufacturer coverage, usually it's like 3 years, 30,000 mileage, but then what happens after that? Typically in that short period, nothing's going to happen, right? But what happens after that warranty, right? We always hear so many stories like, oh, a day after my warranty expired, what do I do now? Now I'm spending thousands and thousands of dollars to fix things. With vehicles having all this technology in them, right? It's expensive to fix, right? It's very common to go to the dealership and say, give you $1,000, couple $1,000 bill for some electronics going out. So what MRC does is it's a repair coverage that you can actually purchase third party that we offer that was built to mirror that dealer manufacturer warranty, right? So it covers the anything but wear and tear. So tires and brakes, it won't cover anything engine, transmission, electronics, wiring, all the buttons on the vehicle. All of these things will be covered. Obviously, there's different packages with that coverage. So we do offer some different packages based on your comfortability and deductibles. There's some deductibles with a no deductible, small deductible, and all you're responsible for is for that deductible. But it's a very powerful product to give you that peace of mind that if something was going to happen, here, I can actually have this mechanical repair coverage. They're going to step in. I tell the dealership, hey, I'm covered. Here it is. You bill them. So it's a powerful product that, because again, vehicles are so expensive to fix, with technology advancing, we wanted to offer something to our members to give that peace of mind.
Great. So thank you for explaining how that works. So now tell us, is
Welcome.
MRC the same price for all vehicles?
Unlike GAP, we talked about GAP being one set price. MRC, mechanical repair coverage, is vehicle specific, right? So it's specific to your vehicle. When we give quotes, we're going to be able to get your VIN number and your accurate mileage, because we're going to put that in, and it's going to give us quotes exactly for your vehicle. It's a personalized quote for your vehicle, and it's going to give in detail what will be covered. So the answer is no, it's not the same price, but because obviously vehicles are a different price and different models, different electronics, different things on it. So, the more bells and whistles you have, it is fun to have, but again, it could be more costly in the long run for things to fix. So it isn't the same price, but it's a very competitive product, again, to give you that peace of mind if something does happen.
Awesome. Great. So next question is, can I choose where I take the vehicle to get repaired?
Drum roll. Yes, you can choose where to get your vehicle. As long as it's a licensed, approved mechanic, you can. A lot of people say, hey, I'm used to just going to the dealership and saying, hey, fix my vehicle. You can do that same exact process. We work with all of the dealerships. What they will do is, again, they will work with the mechanical repair coverage company, and they will go ahead and take care of it. But if you have a licensed mechanic that you've worked with for your whole family, known them, you trust them, because that's also very important, the smaller mechanics that you trust, right? So you definitely, as long as they're licensed, you can submit a claim. What I do suggest, though, is reaching out. If you do purchase this product, you'll have a lot of information to reach out to them directly. Ask for the company's license, and they'll run it to make sure they are covered. Just in case, like I said, I've never seen where if it's a licensed mechanic, they haven't paid it. But I always suggest give them a call, get ahead of it, and just to make sure.
Great. So next question, will MRC cover previous repairs?
It will not, unfortunately, right?
That'd be awesome.
I know, right? Like, oh, engine's blowing, I'm going to buy it, right? No, in a perfect world. But again, it will not. It starts from the day of, right? And again, I'm not a mechanic. I don't work on cars. You take it to a mechanic. There's a questionnaire that they have to fill out, and there is, what the repair is. If they do have someone they could send out to view the vehicle and kind of see, but they will not cover previous repairs. Believe it or not, we've had some members are just at other organizations I've worked for that have bought it, and then the next day they have a claim. But that's not to say that isn't accurate, right? I mean, you may buy the purchase, and as soon as you drive, down the street, something happens. That's just timing. So the timing was, in that case, was on your side that you purchased the coverage, right? So
right.
Yeah, it doesn't cover repairs from previous.
All right. So tell us, if someone sells their car, can they get reimbursed?
Yes, and that is a great that's twofold, because one, it's awesome because what they do is they will prorate it, right? So they're not going to give you the full amount, right? But they're going to say, okay, it was a 5-year loan, you took it for this long, you only kept it for X amount of years. They'll back into it, right? They have this formula that they back into, and they'll give you the difference. But what I've seen, though, is it's also transferable. So what happens is it's a great selling point to market your vehicle, like, hey, this car comes with a 3-year warranty left. I know if I was looking for a vehicle, that would separate the other vehicles. When I see that on there, it comes with the warranty. And it is transferable. Like I said, you sign it over to the party that you're on, and they will be covered for that remaining time. So yes, you can be reimbursed, but I've seen members actually, the reimbursement didn't add up to how much actually they got more for the vehicle on having that peace of mind selling it, saying it has that extended warranty attached to the vehicle.
That's awesome.
Cool.
So we're getting to our final question. So far, no questions in the no questions in the comments just yet. But so next question is, do I have to pay out of pocket before I get reimbursed?
With our MRC mechanical repair coverage, the answer is no. I did talk briefly about the different products. So they usually have like three product choices. You have like your platinum plan, gold plan, and you can choose your deductible with those plans. Some members, just like when you're purchasing regular insurance, don't mind a higher deductible, right, for a lower cost, right, whether it's monthly through insurance or whether it's price for the vehicle. I mean, price for the insurance, for the MRC. So what happens is, if you do choose to have like $100 deductible, it's anywhere from $100 to a $500 deductible. That is due out of pocket, just like an insurance claim, due up front. Everything else is billed directly to MRC as well, and the licensed mechanic, our dealership. So you don't have to get in between that. If you do have a zero deductible, you literally just give them there's a little card that they give you with your policy. You hand it over to them, call them, tell me when to pick up the vehicle, right? And some people have asked, well, do the dealers like to work with MRC, or are they going to try to rush the job? Are they going to quote higher? Are they going to quote not want to do it because they're not going to get paid? The pricing is exactly the same. So whether you pay it, MRC pays it, or your neighbor pays it, they don't care, right? It's the same cost. They're going to get paid. And if not, I've seen they're more comfortable because they know they're going to get paid because they work with MRC a lot. So it's a very common thing to purchase these extended warranties. So they're used to going through this process. They typically have someone at the dealership that deals directly with MRC, keeps you updated on your claim, through the process, so that you're not in the dark. It's like everything's been paid. Come pick up your vehicle. You're good to go. So nothing out of pocket except your deductible, based on the plan you choose, that fits your individual need because it's individually based. So great question. That's one of the big ones we get.
Yeah, that's awesome.
Right?
No, that's great. So those are all the questions that we have so far. But I do have a question because, we're talking about the cost and whatnot of both GAP and MRC now. Can those be rolled over into the loan that they get at Foothill?
Perfect. Yes, you can either finance those or pay them out of pocket. So the good thing is, like you said, you roll it in, your payment adjusts based on the pricing that you got, and no out of pocket. We finance it, you pay every monthly within. And again, if same things allow that, if you pay off the loan early or you sell the loan and you want to get reimbursed for that MRC, whether you finance it or not, you still can get reimbursed. So yes, you can finance both or pay out of pocket. So either one. And if, let's say you don't finance the vehicle with us, you just want to purchase the mechanical repair coverage, we do offer that directly for our members as well. So if you just came in and said, Michael, my car's paid off, is there a mechanical repair coverage that I can purchase? As a member, it's a product built for you. And yes, the answer is yes, you can purchase it. The only thing is, obviously, you can't finance it. It does have to be paid out of pocket because there's no loan attached to it. So great question, Yadi.
Yeah, awesome. Okay, well, looks like we don't have any questions in the comments. And that was all the questions that we had so far. So it looks like our event is coming to an end. But Michael, do you want to give any last advice or any last comments you'd like to say to our viewers?
Yes, definitely. Again, thank you for tuning in, those who came out into the digital world, right? But it is, I want to leave with, I know we kind of went over some highlight why it's such a great product. But if you want to reach out to myself or my consumer lending team, please do so. The numbers here, because MRC is an individual based product, give us your VIN number, give us your mileage. We'll give you a quote. Whether you take it or not, again, it's up to you. There's no high pressure lending. When you're doing well, we do well. I always like to say, when you feel comfortable, we feel comfortable as our membership. So, give us a call. We'll give you a quote. And again, come to us if you hear about any quotes or anything lower out there. We're very competitive in all of our products, and we look forward to helping you in your continuous financing with autos and additional products.
Awesome. 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 Okay, great. Thank you so much, Michael, and everybody who logged in and watched our live event. So stay tuned for more, because we will be doing one at least every month. And Michael will be on here again. We promise. So
you'll hold me to it.
I will.
I know.
But all right. Thank you everyone so much. And we hope you guys tune in next time, and have a great evening. Thank
Thank you,
you.
everybody. Have a great
Bye.
day. Evening.